Good morning, good morning, good morning, everyone. Welcome back. We are looking at Bitcoin on a daily time frame. Actually, this is a monthly. I apologize. Let's go to the daily. But yeah, as you can see on a monthly, we're looking like we're forming a nice little doji. Unfortunately, we are under that previous candle. We want the body of the candle to get at least to 20,363 and then continue upward for the monthly close. That'd be the ideal scenario. On the weekly, we are consolidating, seemingly in a triangle consolidation to the downside. On the daily, sorry, on the weekly, we want to not close under 19,300. Anything under that would be bad for next week. Now we're looking at the daily. As you can see, yesterday we rejected off the 21 and we are now in the middle of our retrace. This level is actually a level of importance, this 19,300. Also, so with our fibs and our other indicators on, as you can see, we did reject off of the top of the top of the descending channel on a daily. Let me extend this a little bit so we can see it. There you go. So we are still consolidating in this channel, but right now we're hitting almost the mid. This $19,300 level has a lot of confluence if we lose this green fib right here, which we are at 19,500. Losing 19,500, we have 19,300, and then after this 19,300 to $19,000 level, this thin black line is our daily level. Closing any under this candle, hourly or 4 hour, we are going to be looking to go to the downside pretty quickly. Okay, downside targets, we have the main one that I'm looking for is the 16,500-ish, 16,600-ish level, because it's the one-to-one extension of this range. Let me just verify that. So this actually will need to go there now. Yes, so this 16.3 between 16.4, 16.1, 16.3, this level right here is the next level I'm looking for to buy along yet from this consolidation. If we can hold this level here at 19.3 and then continue upward, because this is the golden resistance right here. If we can get above 14, or let's say 20,000. If we can get above 20,000 with hourly or 4-hour open and close, we can look for this 20,300 to $20,800 level. But as of right now, we just need to close the day above 19,500, and then we can go sideways and up tomorrow. But today the goal is to hold this level of support. Closing any time frame candles under this is going to be putting a lot of pressure to the downside. Another thing I want to point out today is I think the market is selling off because it's pricing in the CPI data. It doesn't even matter what the CPI data is. I still think we're going to get a relief rally. So just be ready for some kind of action like that. Let's go to a 4-hour now. So I'm going to readjust this little setting channel in a second. Okay, so here we are on the 4-hour, and as we can see, this little channel that is trying to play out, I will adjust it accordingly. There you go. So this is what we're doing. We're consolidating here on a 4-hour channel. Okay, when we are finding our support, which is right now, if we lose this support, a one-to-one move for out of this channel is either going to be the daily or the weekly level. That's what the stick line is, the weekly, this 18,300. Losing this and any time frame closes underneath it, you're probably going to be looking for us to make new lows next week. But if you can hold above here, we have a chance of going up next week. Okay, we could even tap this and get back up above this thin one, and we'll get. Closing a daily under here, we're going to be testing into this area. As long as we're above here on our daily close, we can look for higher. With this 4-hour closes in an hour and 5 minutes, it doesn't look like the downside is completely over. But the next 4-hour candle, if we close if this candle closes above 19.5 and the next one opens above 19.5, we can look for this relief rally to come in, because I think 8 o'clock is when the CPI data releases anyway. So you can see a nice little short squeeze occur on all the equity markets and then roll back down over. I'm looking for around 20,300, and I did say this yesterday as well, guys. Looking for a rally back up to 20,300-ish and then roll back down. Best case scenario, I would say at least 20,000. Okay, the $300 extra is the wiggle room I'm hoping for this naked point of control to get tapped and this 21 to get hit. And I think this 21 will come down into this level within another 4-hour close or two. But best case would be at least getting to 20K and then rejecting and rolling back down and taking out the previous week's lows and the opens. That would be ideal. And then taking the long from here or this weekly level. Okay. And then if this level fails, right? If this level fails and you take a long, well, you better have a stop loss right underneath this, because this can just flush right down into our targets of 16, 16.4, 16.3. Okay. This once we lose this level here, we can quickly move straight down into the targets that we already have, because there is like nothing really holding us, and now all these people are probably panicking now too. So we are getting close to their entry. Once we tap into their entry, it's going to be a quick move down, because we're going to steal this liquidity before we rise back up. So hopefully 18.3 is the bottom, but if we go lower than 18.3, okay, we got all the way to 16.1, 16.2 to look at. So I'm not bullish, I'm not bearish, I'm just giving you both scenarios. As of right now, we are in a rising relief rally, which just got rejected and is coming to the downside, and now we're looking for support. If we can find support here, the rally next time to the top side will probably break the 200 and go higher. But if we lose this level here and then start losing this level here, then the rally is going to get really mean and probably flush everyone out to the downside, to the bottom of this descending channel, basically all the way down here somewhere, and then pop back up. And we can see worst case scenario, like it would just go straight down, take all the money, then come back in this channel, consolidate, something like that is what I'm imagining. Going like this, it would just reject back down. I don't think it has enough juice to go right through those levels yet. So something like that is what I'm looking for. I already think that the consolidation in this range is either at the end or the shorts are about to start piling on. Okay, that's Bitcoin for you. Let's go to Ethereum on a daily, not that weekly stuff that we did. So here is Ethereum on a daily time frame. Whoops. And we are basically consolidating the bottom right now. I do think that we are either going to go sideways and then up, or we're going to take these lows out to the bottom, which we were looking for anyway. If we do get some kind of relief rally today on the daily, I don't think we're getting above 1125. I think that's going to be the area we hit and roll over, make the next dead cat bounce situation. Maybe right into open, it goes into like this area and just roll down hard. And then you can find some consolidation in this ranges, come back up. So that would be kind of what I'm looking at right now in Ethereum. It just does not look as good as Bitcoin. Another thing, as you can see, we were following this descending channel, and we were following this. This channel needs to be adjusted now, and we'll do that on the 4-hour. Okay, let's ignore all these drawings for now. Okay, So the point I'm trying to say is right now we are going to be tapping this previous week low at 1043. If we lose 1043 even on an hourly open and close, we are going to be gunning to the downside. We have a negative point of control maybe at 995 and the next one at 930, and then the previous month low at 879 is the last thing we would be testing, which is this wick. Losing that, this measured move, oof. Let's just say it's like that. Oh, we're looking for a move like this as of right now, coming right into our pocket of buy at 770, 742-ish. And I will refine that. Let me double check. Yes. Yes, this is correct. You can let go of this channel because it already broke down and under. You know what I'll do? I'll leave this channel actually. That's the only channel that I do. I think there is some confluence with this that we will want to see that. I'll leave that there. I'll thin it out so I can make sure it's touching my wicks. I know that's okay. We're gonna let that slide. This one needs to be adjusted. That's what we need there. We have our 829 be the target from this consolidation, and then this is where we would want it from the previous. So we have a little bit of wiggle room for this consolidation. All right, and lastly, I am going to move this because that short did play out perfectly. I was asking myself. Okay. I think it would be wise to have the guide to the downside. Once it breaks it, have script that lays these lines down automatically so I don't have to keep doing them per video. But you know what? It's good practice because it's like when you write notes in class, you know, and that's how I like memorize things. I have to write it down. So when I trade, doing the chart is kind of a similar thing because things pop out that you wouldn't have noticed earlier. But that's only because you're drawing. You're like, oh yeah. So right now volume is subsiding. So we have 56 minutes left on this candle. It's probably going to push down hard, and then the next candle might tap a little bit down to test the previous candle low, and then we should probably look for some kind of relief rally. So that is what we're looking at. We are under our support right now, so we are testing these lower fibs. And yeah, we're gonna find out in 55 minutes if we can hold this level. If we hold this level, we can test back up into the daily open or this golden pocket area again. And then if we get our rejection, we can dump down. This not as visible as I would like. Let's just thicken it up. There you go. That's fine. This one will thicken it up too. So we can see that that's the area to break to the top side for looking for continuation. And then to the downside, if you break this, here's your measured move. And yeah, I know the chart is a little bit convoluted, but what I'm looking for is a relief rally into this area right here, into the daily open, which is 1095, and then probably a rejection back down. If we get back and start closing 4 hour above this 1095, which is where this trend lines, both channels are meeting, then we can probably get to the other level at 1125, so 1125, and then we can see if we can find support above it or not. If we can't get above 1130 with 4 hour opening closes, we're just going to roll back down, because this red line right here is the bottom or the top of this descending channel. This right here would have been my long right here. Descending channels should be green. Ascending channels should be red. That's how I play. So this right here would have been where I was looking for my short. So I got it right over there. Ish. I think I had it at like 1240 and it went to like 1260, 1270, something like that. It was a funny day because I knew that the shorts were being built, but the whole day was euphoric where the market was just up and up and up, and people were like, "Yeah, we're going to the moon." I'm like, "Man, you guys get ready. This is at the resistance right now. Should be looking for shorts." And 2 days later, look where we're at. So right now, all the previous buyers are about to get tested, and I know the market maker. I know him very well. He's an asshole. He's not gonna let you guys just stay here and not get tested. More than likely, he's gonna come and tap under your level and then go back up and just consolidate sideways. If we go sideways this week, it's better. If we lose this level, then we're gonna be waiting for another week or two for confirmation that yes, the bottom is in, because the weekly is just starting. This is just starting to form a bottom, but the bottom is not here. This is not a bottom. And if you think about what's going on here, it's one of these situations. Okay, I have too much stuff on my chart where I can't see what I wanted. Right there. So what we're looking at is a consolidation like this on a weekly. Okay, so you can imagine how much up and down we're gonna go through still. This is just getting there. So for us to not assume that we're gonna fill this bottom is kind of silly, because when have we not filled out a triangle completely? It makes sense that the market maker comes back, tests this lower wick down here just a little bit, put some pressure on that, maybe not go all the way to the bottom. But if you look at this ascending triangle, right? I mean, there's some ascending trend line on this sideways triangle consolidation. Well, it's getting higher and higher and higher to the bottom. So when we do test the bottom on another weekly level, we're not going to get this wick, but we'll help close to it. Maybe like at least 994 or 882, and then we can continue our rise up. This 882 is right where the wick is. So, I mean, like if they tap it up $5 underneath it, maybe go to 829 for like 5 minutes and go right back up. I mean, that's all they need to do. They just need to tap into that area to hit stops and get that liquidity, and then they can go right back to the plan, which is going up. So be wary that this could go down, and then we could come back up. That's a weekly. There's a daily. Does that look better? I'm sorry, guys. I'm trying to do my best. It doesn't need to extend all the way this far either. Usually these things break out within 70%. So yeah, this is a little bit overdone. I'm not gonna lie. Then shame on me, because I've done this in the past before, and I try to be like, oh, it's not gonna take that long to fill out. That's way too big, and it actually does take exactly that long. So don't assume. Just draw your assumption out. So I mean your trading plan. It's not an assumption. It's an educated guess. Your trading plan. Try it out and then wait for the price action to do what it needs to do. You don't need to put too much pressure on it other than just wait for this to fill out. Once it breaks outside of this range, you can look for your long. Once it breaks outside and the bottom, you can look for shorts. More than likely, price will come out, test it, and then continue. So at least now we have this as our guide of what we are waiting for price to break out of. And another thing I will do, I'm going to remove, okay, here. I'm going to remove this. And then we're going to change this color to orange. All right. Just so that it's not green and it's in the way of all the other stuff. I know it's like really, really compact in this, but, and then this measured move, clone it. Yeah, we gave you the downside target, but this could easily break to the upside. Hit that 55 over here somewhere. So you do have both possibilities. It's just gonna be, are we gonna turn around here and test the upside, or are we gonna actually break everyone's back and go to the downside? So that's Bitcoin and Ethereum for you guys. If you have any questions or concerns, please feel free to leave them in the section below. If there are any other assets you would like me to cover, please feel free to share them below and I will get back to you. Aside from that, guys, please do like, subscribe, and press the bell button for notifications so you guys get these real-time updates. And I will talk to you guys very soon. Oh, remember this situation over here? We were looking for that bounce. Like, oh yeah, let's push it. So they made a nice little bull flag, and then it destroyed retail by just making a 1-to-1 extension. So it didn't matter if you had even like 5x or 10x leverage. I think you still got liquidated. Be careful, guys. And now this is where people are looking for longs. Why would you take a long anywhere other than the previous week's low? Once this previous week low is broken to the downside, you're gonna flush all the liquidity out of all these people. So this would be a nice place to take a long. You know, you can take a long around here with a stop loss like under previous low, like 1,000. And then if we don't get that area, then good. You got an amazing cheap long for the upside. If we break that level, then you can switch to the short, because more than likely it's going to be that 1-to-1 to the downside, which I already gave you the targets. Almost like 800. You know, if you got like a $200 possible move from this daily all the way to this weekly, it can happen. Just so you guys know. All right, well, talk to you guys soon. Have a wonderful day. I hope everyone is going to be trading carefully today, because CPI is about to release in about an hour and you're going to see some volatility. I think market is going to sell off hard until CPI is released and then bounce back quick after. So let's see what happens. And this is right now, if you are a trader, this is ideal right now. Even if you don't do all that fancy stuff, you can just trade a straight range. Okay? You know price is in this range right here. Does that make sense? You can trade off the midline, where you can see all this price has been trying to support and then break down. You can trade off the actual support or the resistance to the top side. You don't need the triangle and the channel and this and that, but they all help. For me, at least, it's something for me to do it myself. But for you, you can see how many different points of confluences we have per trade, right? We have multiple things giving us these levels, not just like a drawing. So To each their own. All right, guys, have a great day. Talk to you soon. Be safe.